We now are going to talk about where the hell is the money going to come from. Now, as one of the frustrated people online said, Mametja, in the earlier session is, yeah, we talk about the same things. Yeah, we talk about the same things. Where the hell's the money going to come from? But I'm sure this year's panel has got money bags, big bags, brilliant ideas, and even listing on a JSE may make sense, Patrycja. So one never knows, huh? One never knows. Okay, guys, so let's all settle down. Remember, the way that you get your questions to the front is via the Slido platform. So scan, go through, and then there's a place to post your questions. So please do that. We leave 10 minutes at the end. So Mametja, I'm stealing your time. That's your time. And then the 10 minutes at the end is for Q&A. So we want to have a conversation about the obstacle of obtaining financing for the projects. Over to you and your panel.
Thank you, Bernard. Good morning, everyone. I think this is the session that most people always want, where they want to find out where's the money? Where's the money? Where's the money for all these wonderful projects we have in Africa? On the panel this morning, I have with me, I'll start from my right, Patrycja Kula-Verster, who people know from the JSE. She heads up the primary markets equity origination. And we have Shannon Royden-Turner, who's the CEO of Alchemist, Actuality Africa, which is a very interesting company, and you'll hear more about it as we continue talking. And online, in London, with all the pounds, we have Gervais Williams. Gervais is the head of equities at Premier Miton. And we also have Mike Wrotniak, who is investment manager at Orion Resources Partners. Welcome, everybody. Mike, I'll start. We'll get right into it. Our topic is how can juniors overcome the obstacles of obtaining financing for their projects? So, where's the money and how can we actually get this money? Welcome, gentlemen. I hope it's not raining in London, and the weather is much nicer than we have it. It's quite cold in Joburg right now.
It's teetering.
Yeah, so you should have come down here. It's actually sunny. Mike, I'll start with you. Let's start with what are the financing options? And as Bernard said at the start of this, sometimes people feel it's more of the same. We have the same parts of funding. We have the same questions, the same. So spice it up for us as well. What financing options are currently available to juniors to fund their projects? And who are the different financial backers at each stage of a mining project?
Of course, and just let me start by saying thank you very much for having me on this panel. Looking forward to this discussion. So, look, I think as you very rightly point out, the mining industry is slightly unique in the sense that depending on where you are in the life cycle of the business, there are a variety of different things. So there's different financial backers, there should be a different management team potentially, et cetera, et cetera. It's unique because, on average, it takes a mining company, and I say on average, but really I mean at best, from initial discovery to first production and positive free cash flow, about 10 years, right? And so your partners during that journey are going to be different depending on where you are. So perhaps I'll break your question down, and I'll start with what I think are the two easiest ones. So firstly, there is your capital requirements for construction financing. I know that one the best because that's what Orion specializes in. So there are companies like Orion, we're a private equity fund that is exclusive to the mining space and in late stage investments, including construction financing. So we do a lot of that. There are a handful of peers of ours that do that as well, private equity funds. And then there's the traditional route, which is bank debt financing as well, which I'm sure everyone here is very familiar with. So long story short, I still think there's plenty of capital going around for that stage of the business. Now, the second piece, which I think is still easier, I should say, is exploration. So exploration has traditionally been funded by equity. I think it's a lot of retail, to be honest with you. There are a lot of people that feel they can get a quick win, basis, positive exploration results and things like this. And so a lot of that, CapEx program for an early stage company is still financed through the public equity markets, perhaps private, and we're seeing more and more private companies come through the ranks than we have historically. I think that's a function of potentially the public markets not being as available or as willing to invest in mining, unfortunately, as they maybe were a decade ago. But I am still seeing that there is capital available for those early stage exploration plays. Now, unfortunately, I think the hardest part is probably one of the most important parts, if not the most important part, and that is that sweet spot between exploration and FID, so positive construction decision. And that is funding for the engineering works, the feasibility studies, all of the things a company needs to do to prepare themselves for construction. It's unfortunate, but there really isn't a ton of money in the equity markets for that work anymore. I think it's a function of the fact that it's a lot slower. Capital needs to be patient to invest during that time. And unfortunately, capital isn't very patient. You also aren't going to see big results and big wins overnight like you would from a construction or an exploration situation. So it's not all bad because actually, I think the thematic in the mining industry over the last year, maybe 2 years really, is that governments are starting to wake up and get very interested in the mineral space. And so I'm seeing a lot of government involvement through grants, through cheap loans and things like this that will be provided and are being provided to fund that middle ground work, that engineering studies, the feasibility studies, putting a team in place, all the things you need to do to get ready to put, $300, $400, $500, $600 million into the ground to build a new greenfield asset.
Thank you, Mike. I didn't hear you mention the triple F in there, but I'm sure that Gervais will also add on to that. Gervais, I don't know, when we did our prep, you wanted to add a new realm of funding or ideas around innovative funding mechanisms. So before you actually go into the next question, if you want to add on to that on other funders, please do go ahead. But the question I have for you is, what considerations do investors take into account when deciding whether to fund a mining project? I am almost confident people sitting in the audience want to know, what should I put forward when I actually bring my mining project? And what factors do the regulatory regime, the political situation in the different countries, etc., count to how investors look at whether or not to put money in a project?
Yeah, I mean, obviously, I'm an institutional investor, and institutional investors, by their nature, tend to be a bit conservative. We're probably a bit like Michael. We're interested in projects which are coming towards cash generation. So the early stages are less likely for us to get involved. The slightly later stages, more likely. But most particularly, I think we're in a massively changing situation. For many years, institutional investors have been able to make plenty of money from just investing in index funds, and mainstream companies and small companies or emerging companies haven't been a big part of their portfolios. But I think we are actually looking at a period of change now. And what's been interesting is many of the institutional investors have missed out, for example, on the gold appreciation. It's not just gold price has gone up, of course, gold mining companies have gone up even further. And so it's been a really wonderful sector to generate an attractive return at a time when actually there haven't been so many returns elsewhere, apart from the mega cap US technology stocks. So I think that is a starting point. In terms of some of the things, I mean, yes, of course, we're worried about sort of risks, country risk. I'm getting more worried about dollar hard currency risk. You get a successful project maybe in a country and you can't get the cash out in hard currency. I think that's becoming more significant risk. But on the other side, I think we are actually seeing a widening of institutional interest in the mining sector. So there's two factors going together. And most particularly, I think we're going to see a widening of product interest. I mean, yes, gold mining companies have done extremely well. But what about other precious metals? The PGMs, for example, maybe certain strategic metals like tungsten or tin. I think they're coming through quite quickly. We're seeing a kind of renewed interest, perhaps, in uranium. So I think there's a widening of the range. And most particularly, when it comes to actually developing projects, I'm less keen than many others on the sort of slightly formal bankable feasibility study and such like. I can see there's a place for them, and if you can get them and get the banks behind you, that's fine. But if anything, sometimes I'm quite happy for companies just to have child production, small plants in place producing metal and most particularly cash flow, which allows them to then sort of maintain cash flow even at times when perhaps the market's not buoyant, so that when the market is more buoyant, they can raise more capital.
That's an interesting angle, because I think, sometimes junior miners wait too long to get to big construction and all of that, so the cash flows are actually useful in that period. Shannon, I'll turn to you now and ask around, something that Mike started touching on, which is around on the different stages of the mining project. So how do junior miners transition themselves from exploration to production, to a producing asset? And is it the same CEO? I've seen a few, especially in the listed space, companies where sometimes they boot out the CEO when it comes to a certain stage. Is it the same CEO that should be starting a project and the one that actually runs a fully operational mine?
Yeah, thanks for that question. And I think it totally relates to Mike, and I was interested to hear him say that that's a place where it's difficult to get investment. Yeah. Because I think it's a very underestimated space in the magnitude of the change in the organization, because it's basically a completely different organization. So the founder who started it and did the exploration may or may not be the person to continue it. It's less about is it the same CEO and more about whether that CEO and the leadership team can evolve into what's needed for that next phase. Because, in the exploration phase, it's very much about lean, agile, small teams being able to be kind of adaptive to the situation. And then as it moves into production, it's more about compliance and repeatability and stability, and primarily the leader's ability to really deal with volatility. And if the transition is dealt with intentionally, it can be very successful. But it's not a question of, is it right that the same person continues? It depends on what that person wants out of their career, essentially. If the founder is leading, they need to get clear on what they want out of their future, then figure out what the vision of that organization is, where they're leading it to. And then that will help to determine whether they are or aren't. So, I've worked in organizations where the leader was completely burnt out because they were in conflict with the investor. And so she wanted to leave. She was the founder. It was ramping up. And so we first had to get alignment between the investor and the CEO, the existing CEO, so she could figure out whether she wanted to stay or go, embed a vision for the company, and in that she decided she didn't want to. But it's about how you deal with that transition intentionally that can make or break the organization at that point.
So the transition, not just from the operations, having communities, more employees, etc., but also on your investors, what is their expectation?
Yeah.
That's good to know.
Can I add one point to that, Shannon, actually? Because I think that's a really interesting comment you made. But I don't always see it as being completely binary, in the sense that there could always be a place for said founder
totally.
At the organization. So we've seen situations whereby a CEO or an executive management team, let's say, gets a company up to a construction decision, and let's just say that he or she leading the ship is not a mine builder. That's not their background. They know it, investors know it, everyone knows it, but that doesn't mean they don't have the right vision and the right direction to take the company forward. So in those types of situations, what we've done, or what we've seen done, is that senior role becomes like a president. You can call it all sorts of different things, but we've seen it called a president. You then bring a CEO in who has that mine building experience, maybe not on the strategic side, but knows how to build a mine, and all the sort of complexities that come with that. And you still have someone at the helm who is driving all the strategic discussions with the government, with investors, with, stakeholders, et cetera, et cetera. So I think, there's a nice middle ground there. It doesn't necessarily have to be stay or go. And I think you agree with that, but I just thought I'd flag that for what it's worth.
Yeah, 100%. I mean, I also worked in organizations where the CEO has remained. But it's about them evolving from somebody who's very operational and problem-solving and technical into a much more visionary, strategic leadership role. They need to be able to make that evolution in order to successfully lead it.
So I guess it's bringing in the right skills and, making sure that the roles can evolve. And I mean, we've seen it even in the South African context where, the CEO remains too long and could be that executive chairman.
Why do you look at me when you say that? Move on. Just move on now.
Well, you're here now. Pat, let's come to you. Let's talk about listings for junior miners. What is happening on listings on the JSE? Are our asset managers loving junior mining and supporting junior mining? We've seen, LSE a little bit, TSX, etc. Is it coming to, are you guys ready for the African junior miners?
Look, we are always ready. That's the bottom line. So, look, what the JSE has done over the years is numerous things to try and address the challenges in the junior mining space. But it's not easy. We have created a JSE private placement platform which allows for private companies to come and raise capital off the JSE, where you don't have to be listed. It becomes a bilateral fundraising mechanism, and it allows for companies, but again, the precursor there is that whilst it allows the companies to raise capital, we're looking at BFS stage companies. So when we're talking about exploration, there is a need, and perhaps there is a void of that risk capital available in South Africa for the junior exploration companies. And that's why we do see a lot of our assets go to Toronto, go to Australia, go to London. And, I've been coming to this conference for how many years, and I feel like we're talking about the same thing over and over again. And you've got the right to, of course, compare the JSE to these other international jurisdictions. But in the absence of similar tax incentives like we see in those markets, we will not be operating at the same funding level as what those other exchanges are. So us as the exchange, we continue to do what stock exchanges do. We will amend our rules. We will try and make it easier. We'll try and make it a lot more cost-effective for the issuers. So, for example, we have brought in a fast-track listing process to say we acknowledge that companies will go to Australia, Toronto, London to raise their initial capital. But once you're at that BFS stage, come back to South Africa and do a secondary listing on the JSE. And we've seen that, with a lot of companies like Orion. We've seen it with Sugar Minerals, which listed this year as well, to say there is a deep and liquid institutional market here in South Africa. Some may be keen, some may not be keen to invest, but the important thing is that as the company is transitioning from a junior exploration to a production-based company, your type of investor universe landscape also changes. Yeah. So the JSE has got an ability to institutionalize a shareholder base. But again, right mineral, right time, right project, right management. So that's really what the JSE, has always been there. And we will continue to push the envelope to say, let's innovate. We've got JSE private placements, we've got the listed market. What else can we do that's within our power? For me, the biggest role that the JSE can play is facilitating a flow-through share model scheme through the exchange. Then you'll see the floodgates opening in terms of access to capital, in terms of projects coming through the door, and we haven't seen that. And I know that this is a question earlier, so I'm going to just jump to it now, but to say that, we've done together with the Minerals Council, together with a number of the lawyers behind on this board, at a pro bono basis, where they've put in the time, hours, in putting in a position paper around looking at the various tax incentives that we had. 12Js, how do we compare that? What else should we be doing? And we call it flow-through shares, but let's just call it tax incentive. What should we be implementing in South Africa? And the end result was that a similar flow-through share model is probably the best mechanism to do that. So we've got this in the back of our arsenal. We can today submit it, but we need industry to be aligned. And that alignment is not yet there. And it seems that, we need to get our house in order from a broader minerals sector perspective before we can go in and introduce these individual kind of mechanisms to actually propel and boost more investment into mining companies. The bottom line is that the JSE wants to, we want to play there. We want to support. We want to create jobs. We want to facilitate more capital raisings. But we do need an incentive. And for the JSE, the incentive that makes the most sense is a flow-through share model, which is then traded through an exchange like we've seen through all the other global exchanges. So for us, we continue to work with the regulators. We continue to work with everybody. But I don't know, 11 plus another years before we get this done. Bernard just nods.
But you sit on a document that you don't socialize with the rest of us. It's your fault.
I'm sure there is no problem in sharing it. I mean, our friends from the Minerals Council also have it in their arsenal. So we can certainly share it. It's been updated actually 2 years ago. We were going to put it forward. It was, there were lots of hopes and plans.
Let's stir some shit with it and see what comes out. So share it with us.
There we go.
Yeah, I think I do agree, Bernard. I think it needs to be shared more, and maybe we have an industry session around that. And I'm going to put you on the spot, and you can take time. I'll ask other questions and then come back to you. What's stopping us? I mean, I've had the story. I was still youth in accordance to South African laws when we started on this journey. And you're saying 11 years, maybe I'd be retired by then. What is stopping us? We need to now talk about what is the crux that can actually crack this and take it to the next level. I'll hold on to that.
Not a problem.
And then we'll come back to it. And let me come back to you, Mike, and ask you around, what is the package? In the package, that would demonstrate a better project for our investors. What are you looking for in that package from any project to demonstrate value to you and that you're actually going to make money out of this project?
Yeah, that's a great question. And there are, I think, so many different things, so many different ways you could answer that. But look, I think maybe sticking with the thematic of some of the things I've spoke about already and some of the comments that Shannon made. Honestly, I think one of the best things a junior can do to demonstrate, at least from Orion's perspective, that they're ready for big institutional capital to support them is indeed the management team. And by that, I don't actually mean the executive management team, the CEO, COO, things like this. I'm talking a little bit more about the build team. So, it's somewhat of a chicken or the egg type of situation in many instances, because you have a situation whereby, you have this great owners team signed up, ready to go, just waiting up on that last, bit of money to come in before they commit, before they leave their previous jobs to come and help you build your project. And that's great. And we understand why that happens. But at the same time, Orion or other institutional investors, let's say a bank, for example, isn't going to, close the funding, isn't going to give you the money to do it until they know who these people are, until they know that these people are fully signed up and ready to go, that they're employees of the company. And so my view is, if you're looking at a package, right, one of the most important pieces for us is everyone in place, and are all of those people who are in place the right person to do their specific job. That is a huge differentiator between what we call like serious companies and promotion type companies. If you really want to build the asset, if you really want to get into cash flow, which I don't think all companies do, but and that's fine. It's a different strategy in our industry. But for the ones that do, take a bit more time, raise a bit more early dollars to get those people signed up, so you can demonstrate to your backers, we have an all-star team here, ready to go, ready to pull the trigger, and as soon as your dollars come in, we're breaking ground.
I like that, the management team. I think sometimes we think that the right asset and the resource and reserves are all that is there, but it's about the people.
Well, as I said, there's a million different ways you could answer that question. Those are all, I hope, at least a given. maybe not.
No, but no, I like what you're saying, because what you're saying
Yeah.
is, the right project in the wrong hands might not bring out the value. So you need the management team to actually unlock it.
I think a good team can build a bad project, but a bad team probably can't build a good project, unfortunately. So it is a people game.
Yeah. Gervais, coming back to you, what are the current trends in the capital markets, and how can junior miners align themselves to that? What has the Trump effect done to the capital markets, as an example? What is happening with, you spoke about gold earlier, but, are there any other trends? I saw in London, it seems like SPACs are coming back. People are raising money from that. What is hot now? If someone in the audience is sitting here and is seeking to align themselves with the markets right now to raise money, ASX, TSX, AIM, what are some of the things that you're seeing that they can actually leverage on of the activity in the market?
Yeah, I mean, when you look back a bit, I think you can see actually that the last sort of 5 and 10 years have been very much dominated by mega caps, large companies, index funds, of course. And so, that's been a factor which has actually worked against the interest of smaller companies, particularly smaller mining companies, and many of them have struggled and the valuations have come down. But with, even prior to Trump, we've been through a period of transition. We've seen inflation, we've seen uncertainty about conflict, and most particularly with Trump injecting extra uncertainty, we're now seeing a profound change in markets. I think this is a sea change in markets. I think it's going to last for 10 or 20 years, maybe 30. And specifically, I think we're going to see a big move away from the sort of high growth technology stocks, which are driven by low interest rates and very low bond yields, back into companies which are resilient, companies which generate good and growing income. And that's going to be a move away from the US market, particularly towards sort of more traditional companies, many of them listed in London, but also listed in Europe and one or two other areas. Good and growing income is going to become a major feature. But particularly in terms of the mining sector, this also marks the change away from mega caps back towards small companies. And so what's been interesting about this year to date isn't so much that markets haven't done much, they've gone up and down a little bit, but most particularly European markets are outperforming the US market. And that's not because I think the UK or European economies are likely to do better, but I think it's a pattern change towards the good and growing income dominated by these markets. But most particularly, and this has only happened in the last 2 or 3 months, we are now seeing in the UK, for example, UK small caps outperforming large caps. That happens traditionally every now and then. Small caps do outperform longer term, but it's been almost absent for the last 10 years. There's been moments when it's happened. Basically, it's been absent for the last 10 years. And what's been thrilling is not just to see the UK outperforming, but actually to say UK small caps, including some junior mining companies, outperforming the main market. And that brings with it new capital flows. So I think we're looking at a complete sea change. It's early days, there'll be zigs and zags, it's not going to be every month or every quarter, but we are beginning to see this new trend coming through. And the scale of change could be quite considerable. We could get cartels coming forward again, and certain minerals might actually suddenly find you don't just make a little bit of extra money, you make a lot of extra money. There may be export bans as well. So all of these things are driving very significant change. I think if we're looking here in 3, 5, 7 years' time, I think institutional interest in the mining sector will be much greater than it is now. It's genuine diversification. But more important, I think also there'll be a move down the market cap range, and some of the less well-known companies, some of the more immature companies in the mining sector will find it actually easier to raise capital. I know that seems kind of quite a long way from where we are now, and it may take a little while before that pattern really changes. But I think that I'm tremendously upbeat. I'm more upbeat now about the potential for a pattern change than I've been for 30 years.
That's interesting. I was going to ask, would you advise junior miners to partner with existing listed companies? Because I heard you talk about diversification, or would you actually say, going and listing yourself if you have the right asset, or is it a combination depending on what asset you have and what assets are hot?
Yeah, I mean, certainly, certain metals and minerals will be hot at certain stages. But most particularly, the main thing is to get to the finishing post. There's no point in getting halfway to the finishing post and running out of cash. So whatever you do, you need to kind of think about how the risks are that you don't end up having raised part of the money not quite completed your feasibility or completed your feasibility and not getting the additional capital you need to build out the project. So whether you do that by merging with an existing company, taking an existing listing and reviving it, or whether you go for your own listing and do it independently, I think there's going to be opportunities for both. I'm not going to say one or the other. But what's interesting is I think for the first time in probably 20 or 30 years, I think you will start to find an increasingly wide range of institutional investors beginning to take an interest in your story, beginning to hear the opportunity of raising capital and backing your company on more than one occasion. And that's really the tremendously upbeat feature, which I'm looking forward to from here.
Okay. So you heard it, guys. I think there is an opportunity in the markets now for junior, smaller stocks.
Mametja, if I may maybe add just the JSE angle. So you mentioned specs. Of course, we've also got this as part of our product suites, and a special purpose acquisition company is an SPV that you essentially list, you raise the capital, and then you acquire the assets. We too have had some conversations, particularly in the mining services space, around some specs, investment holding companies. And so, I think different markets have got different opportunities and aspects that they add to in terms of the funding mix. However, what we find is that there is still a bit of a cost barrier in terms of going to offshore markets to raise money off the offshore markets like London. And perhaps at times, one can, and I'm going to do a bit of a pitch for the JSE, is to say, you could use the JSE as a mechanism to funnel in some UK investors via a SPAC type vehicle. Instead of now having to solely go to the UK, list there, and then obviously just raise your capital of the UK investors. So you can have a combination of both, SA plus UK, and the costs are a lot more, or let's say a lot more cost effective on the JSE side. The one other development that we've also seen, and look, this is not a junior mining company, but Pan African Resources have used sustainability-linked bonds. So using our fixed income markets, which is the bond markets, to actually facilitate and raise money for some of their renewable projects and some of their other projects. So they drew down, I think it's about 800 million in 2022. Last year, it was about another 840 million for the sustainability-linked bond. And in this context of decarbonisation, where you're trying to link it to specific outcomes, you do have a myriad of other instruments available on the capital markets, that being equity, kind of JSE private placement, plus fixed income, which you can go the full green suites, sustainability linked, socially linked fixed instruments as well, which again are also a good instrument that one can look at if you're a well-established entity, at least looking at various funding mechanisms.
I think, Pat, the more I listen to you, the more I think you should put together some of the funding available for junior miners and share it with Bernard to share with everyone in the room.
A cheat sheet, sure.
But the cheat sheet for junior miners on the JSE, it sounds like there are opportunities that are opening up. And I love what you said around, cheaper costs to getting to the listings. Shannon, maybe another question for you. I mean, we have maybe 30 seconds or so. How can junior miners best, prepare themselves for the long haul? It takes a while. As Mike said, it's 10 years, right, from exploration probably to getting to production. How can they prepare themselves for that 10-year journey?
Well, I think there's a number of parts, especially in relation to investment. I think, obviously investment in mining is a continuous event. So it's literally a leadership strategy. And so having in place a very clear investment strategy for the life of your mine is one critical aspect of it, and identifying which investors, like Mike was speaking about, there's different investors that are appropriate at different moments. But I think one of the things that is critical for the leadership team is that they have certainty of where they're going because of the high levels of volatility and uncertainty in the markets and the regulatory environment. Capital loves certainty. And as a CEO, that's your job, right? And it's interesting because when I work with CEOs, one of the things that they're up against predominantly is their own self-doubt. And we see people in those leadership positions and we don't think that they have that. And so, really being able to manage yourself as the leader of the organization in relation to all of the volatility that you have to deal with is one of the key things that you can leverage to attract continuous capital. Because the more clear and certain you are, the more you attract capital that wants to partner with you because of that certainty that you're going to lead it.
Thank you, Shannon. And I just want to thank everyone on the panel. This has been quite interesting, even from my end as a financier. I've learned a few things and tricks along the way. So thank you, Bernard. Let's hand it over to you.
Too many questions.
With questions.
Too many questions. Nobody wants to wait for tomorrow when we talk about commodities, what's hot, what's not. So I'm going to put it to our gentleman in London. If it's okay if I call you gentlemen, you guys from London may be offended by that, especially in private equity, Mike. So, Mike, if I start with you, so what's hot and what's not? But briefly, what are you excited about if you had the freedom to pick one or two, three minerals, commodities? Where would you play, Mike?
You put me on the spot. Okay. I think, look, from what's hot right now, gold, no one will argue, is very hot. I think, historically gold has always been seen as a safe haven investment, but I think it's actually becoming a bit more of a strategic investment moving forward. It's not looked at as a financial instrument anymore. It's really looked at as I don't want to say hoard gold by any stretch of the imagination, but it's certainly becoming something that institutions and private investors themselves see, I need to have some of this asset class for my portfolio from a strategic perspective for a variety of reasons. Now, that's sort of the hot ticket at the moment, so I won't dive too much into that. But I think, there are a variety of other minerals at the moment which are still very, very appealing that are not in the precious space. The energy transition is not, a term that anyone in this audience will be unfamiliar with. That said, I think we have certainly seen a bit of a slowdown in that sector, in that arena, if you will, for a variety of reasons. Now, I think it's still there. What I think investors are coming to grips with now is that it is a transition. It's an energy transition, right? You don't flip a switch overnight, and no pun intended, everyone's driving an EV the next day. So I do think that sector still has a lot of upside. In particular, I really like the tin market. I think tin has been one of the most unloved commodities in this sort of electric space, if I can call it that. It hasn't seen the rapid appreciation, of the likes of lithium, cobalt, et cetera, et cetera. It's a bit unloved. There are a variety of reasons for that, but I think with tin, especially, it's very much a supply side story. There's just not enough sustainable, call it quote unquote Western produced tin going around. When you saw Alphamin a couple weeks ago go offline for just about 2 weeks, you saw the market react phenomenally. And that's just one asset. You wouldn't see that in copper. You wouldn't see that in lithium, nickel, et cetera, et cetera. So I think tin, personally, is one of my favorites right now. And I think, while it might not be hot at the moment, I think it's a space to watch.
Thank you. So I want to come to you. Everybody on my timeline here questioning the copper people just can't believe copper is the hottest thing. It is so scarce. Why is the price not responding? What are we missing? Some of the biggest promoters in the world are promoting copper. What are we missing? Are you a copper bull? Talk to us about copper and what else do you think should be hot?
Yep, I'm a copper bull. I think, it could be that EVs will certainly expand rapidly, but I think it'll be more sort of hybrids, which are going to be the main driver here. So again, they all use copper. I think copper is going to be in shortage. I think copper price will go up a long way. I think tin, like Michael says, I'm with him on that one. But I think if anything, people are also underestimating how much gold could move. Don't get me wrong, it's gone crazy already. But I noticed over the weekend that Zero Hedge, which is a kind of website, was talking about a multi-jurisdictional gold custody network being set up by the BRICS, which would use the UN as a medium of exchange. And if that does come forward, and I think it will, by the way, it'll be a slow burn. It's not going to change anything overnight. but I think this will completely change people's attitude to precious metals. So again, I think gold will be could go a lot further, not in the short term, but in the medium term, and actually particularly over the long term. I think PGMs, I think, go an awfully long way. And I think certain strategic metals, not just tin, but actually things like tungsten, for example. I think tungsten is a really difficult market, ultimately. I think we're going to be real shortages of certain assets like that. So I think there'll be specialist metals. And as I say, particularly, I think new cartels. And whether it's going to be a tin cartel again, as there was in the 30s, or something different, probably something different, I assume. But, as investors, we've got to be across the area. We haven't just got to be, rifle shot picking out the individual metals. We've got to be open-minded and find projects which are superb for delivering all these wide range of metals. So, as I say, I'm very bullish about the metal market. I'm very bullish about mining specifically. I'm very bullish about potential for new capital, institutional capital to come into the sector, and the sector to be much larger. But I think even some of those which have been hot already have only just started.
Thank you very much, gentlemen. Tomorrow we are talking a little bit more about commodities and supply, demand, and expected prices. So crystal ball day tomorrow. Bring your cloth and we'll all together look into the future with clarity, won't we? There's a cynical question, as you would expect, Pat, for you. So the JSE expects quality projects to be listed, yet many subpar projects are currently being listed on the JSE. Why is this happening? Is there a concern that the JSE has become too lenient? So we say your rules stink, it's too expensive, take them away. Now we say your rules are too lenient, it's too easy, and you're getting rubbish on the stock exchange.
Okay, please quantify by rubbish. But anyway,
No, so the allegation is, are you getting lesser projects listed?
Less quality.
Yeah. So look, our rules say that, in order to list on the JSE, you need to have things like a competent persons report. And so we have not changed those parameters, which are pretty much aligned with global practice. Whether you go to Toronto, whether you go to London or Australia, the rules are there. I mean, there's been certain changes where we say we no longer call a readers panel to review the entire document. I mean, those changes have been done to ensure that there's greater efficiency. But to my knowledge, we haven't made any big changes to our rules. We are making changes to our rules which will alleviate costs, which will make it more efficient for companies to come to the market and tap the local equity market, whether it's by form of a IPO, initial private capital raise, or whether it's a secondary. And that's essentially what we, for us, we were rated the best regulated exchange for a number of years. We are still one of the the biggest and one of the best regulated exchanges on the African continent. And that certainly we don't foresee kind of changing that status quo. Investor integrity for us is very important.
To just disclose my personal preference, please keep on with the good work. No, we have to streamline, we have to make costs lower, we have to make it easier. And the obsession with, protecting people against all possible risk. Investment doesn't work without risk. Yeah. No risk, no return. So, personal view.
If I can add in 5 seconds, the junior miners that we speak to that do not come to the JSE believe that they can actually get capital. So why do you go to a listing? You want capital, yes, right? And the guys that actually have resources where they have access to capital of a listing prefer to remain private because they don't have to have public scrutiny. So that's one of the things that actually sometimes keep people off listing, not just the JSE, but...
Ran out of time. I like it. That always means there were more questions, and I can handpick the ones I like, which is what I do unashamedly. Somebody, and I suspect it's from the Minerals Council, made the comment that the flow-through proposal is on the Minerals Council website. Click at work and scroll down to junior mining or whatever. That's, of course, the problem. Fantastic document hidden somewhere in a dark corner on a website. I rest my case, but thank you for pointing it out.
It might be an older version, so
you'll send us the new version.
You'll
make it sure please
Okay.
make it available and I'll distribute it
And the
if that's okay.
Okay.
Ladies, gentlemen, thank you. There is money. Are we packaging our projects? Are we de-risking it? Are we giving investors a chance to believe that they will actually make a return? And we have to go where the ore bodies are.
Yeah.
That makes us unique. Sometimes we go into the DRC to mine tin, whilst there's a war underway, or supposedly so. So that's what we have to do. Thank you very much. Thank you, panel, and thank you, participants from London.